Welcome everyone to our first webinar of 2025. Thank you for joining us today. My name is Katie and I am on the marketing team at ASA. So today we'll be exploring smart investing and how AI is changing the investing landscape, presented by Jaaims. So we're going to look at how AI-powered tools enhance investment strategies, save time, and streamline decision-making for seasoned investors. It will highlight how AI builds on existing concepts, avoids common human biases, and uses data-driven insights to optimize investment outcomes. The session aims to demystify AI, making it relatable and practical for those who may be wary of new technologies. So as always, we would love to hear your thoughts and questions. So do add them to the Q&A chat box at the bottom of your screen, and we'll take some questions at the end of the presentation. So I'd like to introduce to you Tui. Tui is the founder and CEO of Jaaims, Australia's first AI-driven investment platform, revolutionizing how investors manage their portfolios. So Jaaims leverages artificial intelligence to deliver unbiased, data-driven stock recommendations and automates the entire investing process, helping investors avoid the emotional biases often associated with poor financial decisions. Founded in 2018, Jaaims empowers seasoned investors to save time, optimize their strategies, and achieve smarter outcomes. So over to you, Tui.
Great, thank you. Is my presentation up?
Hello. I'm back. Sorry, my internet just died all of a sudden. So I'm back online through a phone hotspot. So, okay. Thanks, Katie. All right. You ready to go?
Yep.
Have we started or?
Yes.
Yep.
Yes. Recording.
Hello, everyone. Apologies for that. My internet connection just decided to disappear as we're about to start. So welcome to everyone for today's webinar. I'll just do a little bit of an introduction for you.
I've introed David. All good.
You've introed
so
already?
Over to you, Tui.
Fantastic.
Yeah. Excellent. Can you just confirm?
Well, I'm going to hand over to you, Tui. If you can go through your presentation. If everyone has any questions, please let us know down the bottom, and I'll do a bit of a Q&A session at the end. But for now, Tui, over to you.
Thanks, David. Thanks, Katie. Just confirming you can see my presentation up on the screen?
Yes, all good.
Excellent. Well, thanks, David and Katie, for your kind introduction. Just to extend further from David's comments, Jaaims is a technology business who specialises in maximising AI for investors. We started this project back in 2018 when the concept of AI was very new, but we were fortunate to work with some great people and companies, including ASIC, which enabled us to launch the first AI-powered investing tool for retail investors. So today I'll be discussing how AI is changing the investing landscape, which is a big topic. However, what I've done today, I've just condensed it down to focus on share market investing, and that is where we specialise. So I'll be talking about the benefits and how we're using AI at Jaaims. I haven't gone deep into the technical side of AI due to time. However, we do have some handy webinars that we can share afterwards, which we give a more concise understanding of how AI works. So in today's webinar, we'll be covering 4 topics, AI and investing. The first one is automated trading. So on the execution side, predictive analytics, which is more around generating the recommendation, human biases, and how we mitigate the emotional side of investing, and then finally the benefits for investors in the long term. AI is revolutionizing the investing world by enhancing decision-making, optimizing portfolios, and securing financial transactions, leading to a more efficient, intelligent investment landscape. And so we'll explore that in this presentation as well. So to give you some quick background of the rise of AI in finance, we can take it back to 1997 with IBM and Deep Blue, or what we used to call IBM Watson. And I think we're all familiar with the computer beating Gary Kasparov, the chess champion at that time. Funnily enough, IBM was the first really with this technology, IBM Watson, and they have since depreciated their whole AI infrastructure. So it sort of proves that being first doesn't mean always that you're the winner, but they were definitely the ones that kicked off the AI market for everybody. And so moving to 2010, we started to see the wide adoption of algorithmic trading, more on a high frequency basis. So you would have seen sort of or heard of high frequency trading, especially around Wall Street, where people were executing fast, in and out, and obviously trying to work on a couple of pips, but at high volume. And that's traditionally what everyone associates algorithmic trading with. However, it's advanced much more than that, which we'll explore further in this presentation. And then if we jump to 2015, it's when we sort of started to see robo-advisors start adopting this technology. In the US, a big player is Betterment and Wealthfront, they emerged. And so with robo-advising, in the beginning, we really saw cookie cutter approach to customizing portfolios, where you would input as a customer, 3 or 4 factors that you want your portfolio to do, and then it would generate basically a standard portfolio. Basically, where everyone saw through that, because no matter what variables you entered, it didn't really change much. However, we've sort of seen now AI start to really power that part of the industry. And now we're seeing more customized and more personalized portfolios to meet your investment strategies. In 2018, we started seeing the wide adoption of AI, especially in hedge funds in its very foundation form. So obviously, you might have heard of the term step functions. So if this happens, do that. If not, do this. And that's where people associate machine learning with AI. And then 2018 is really when we started coming onto the scene. And so our foundation, we started looking into models. And funnily enough, we started with IBM Watson. And we spent about 2 years R&D in developing our technology. And we really focused on the decisions making of share market investing or stock picking and the execution. And then you saw 2020, sort of the wide adoption of AI, although companies really weren't publicly coming forward using the term AI, across banking and all parts of the financial sector, detecting fraud, basically being able to process large amounts of data really quickly. And then 2022 really saw AI become mainstream with the introduction of ChatGPT. And I think, as we can say, it's really become normalized and part of everyone's life. Everyone is sort of engaging in some capacity with ChatGPT or the chat tools. And we are finding the benefits of this technology every day as we keep investigating and we keep using it. So AI in its simplest form. So I'm just going to do a quick rundown of AI, and this really relates to how we use it as well. So with AI, there's always a question, or to what you want to find out. A calculation. So a calculation is basically what we call a model, and you would have heard the term about building models, training models. So what that is actually calculations or algorithms behind the scene that helps calculate the outcome. And then you would have heard about the probability factor. So AI, as you know, does not give 100% correct results. And what AI is, it's actually a probability. And what it does, it calculates the most probable answer that you're seeking. And then sometimes that answer is not correct, or sometimes that answer changes, especially in real time when you're talking current events. So we talk about this probability factor a lot to derive the outcome. And then we have the answer, and obviously the answer that we consume that we're seeking. And so AI is the combination of these 4 things, being the question, the calculation, the probability of the response, and the answer. So now drawing sort of more focused on stock market investing and stock picking and execution. There's really 5 sort of strategies that we're sort of seeing how AI is being used in stock markets. And this really relates to us as well, where we're using these 5 really strategies as a combination for our predictive model. And so the first one is predictive analytics. So that is what we call the recommendation. And so that is analysing the data through the models to give a prediction on what the future price essentially will be for that stock. Secondly, we have what we call portfolio optimization. And so that's about optimizing your entire portfolio. It might have, you can sort of associate it with diversification, but creating a portfolio that optimizes the outcome that you're seeking. Thirdly, sentiment analysis, which is a big part of our algorithm at Jaaims. And so that's really picking up the underlying sentiment of the market or the human emotion. Sentiment is really getting more difficult to understand. We're quite really into that, quite complex. And I'll give you an example. At the moment, we have a lot of what we call obviously fake news, and really narratives from media and social media can really drive the sentiment wrongly or correctly, depending on the amount of volume of consensus on something. So as an example, it's hard for AI to decipher the wrong from right in sentiment if 90% of the sentiment is heading in one direction, but that direction is wrong. And so sentiment is something that's really difficult to understand and to really gauge correctly. But that's sort of where we like to focus a lot of our time and energy as well, is understanding the sentiment and the themes within the market. The fourth one is understanding anomaly detection. So an example of anomaly detection is you would have seen, over many, many years when we get a sudden drop in the markets. Now, generally that is driven by the high frequency traders, the algorithmic traders, who can see a currency or an equity for 10% really quickly, and then it gathers back up really, really quickly as well. So AI can be used to help decipher if it's actually an actual move or if it's just a high volume move from algorithms that have driven the price down. And so AI sort of fundamentally is great for that because it understands the trends leading up to those movements. It learns from those trends or those factors before that movement, and then we can apply that to the next move. And so anomaly detection is a big strength of AI, being able to understand that. And then finally, we have the algorithmic trading side. And so you would have heard me earlier mention that, we all see traditional algorithms as, as mathematical equations. So, finding momentum in a market, we associate with that. But it's really advanced quite a lot. And as an example at Jaaims, we have taken the approach that we've trained our AI to analyze a stock like an equity strategist would, as opposed to saying when price gets X, we do this. And so our algorithm approach is that although it's classed as an algorithm, it's really like how we like to think of it is an individual or multiple equity strategists, working together to form a view and a price. And so hence the name Jaaims. When we first founded the company back 6 years ago, we wanted to give Jaaims a personality because that's how we saw us, that we're actually mimicking an equity strategist, just not executing mathematical equations. And so just to sort of extend further, I've done a slide on how we apply AI and the analysis process, which sort of should give you an example of how we apply it and this is how we apply it, but obviously different companies and different strategists apply it differently to us. So we analyze about 1,000 stocks each day in our network. And what we do is we screen, for strong financial attributes and market resilience. So that's more of a static equation. So there's sort of parameters that we're looking for, that we sort of finite the sort of sectors that we're looking for. And that's come over time after learning a lot about our technology. So in the beginning, we used to sort of spend a lot of resources on analyzing every equity thoroughly. And then what we'd find, we'd probably only execute on 5 or 6% of those equities over that time. So we were using a lot of resources in analysis that just wasn't being used. And so how we've sort of learned and become more efficient with that is that we sort of work around themes now, and themes that we sort of target for each year, that we try to sort of really own that sector with our AI. So as an example, for 2025, the themes that we're looking at is energy, and in specific, the supply chain from the bottom up. We're looking at AI technology, but on an application level. So we're not sort of looking at a bricks and mortar NVIDIA level. We're looking around looking for companies which can integrate AI technology to get a benefit quickly. And so that's an opportunity that we're sort of really focusing our models around. And finally, robotics this year. So we're looking at robotic opportunities. We're seeing big moves over the next couple of years in that space. And that's probably the opportunity that we're looking at with our themes. Now, that's not to say that we don't spend time on all the other sectors. We do. But building models is quite a resource-intensive process. And you've got to really work on your resources. Otherwise, our R&D spend, which is already in the millions each year, would probably really quickly get into the tens, almost hundreds of millions if we really went deep with resourcing. So you've really got to pick where you want to focus. So what we do is once we screen our companies and we find opportunities, we then collate data points relevant to each investment opportunity. So we have a bit over 250 connected data points where we source information from balance sheets, P&Ls, to analysts, to news, and all different sources of data. And so what we do is we collate that data and then we analyze that data, and that becomes part of our decision-making process. Why AI is so effective is that we can probably analyze about 120 sources of data in about 10 to 12 minutes, depending on the size of that data. And there's no human way possible that any human can do that. And so that is one of the real advantages of using technology and AI, is that you can really speed up the process of analysis that allows you to make smart and efficient decisions. So once we collect that data, we analyze that to generate the recommendation. And so the recommendation generally is a buy, hold, sell. But on a technical front, each stock gets rated between -1 and 1. So all the numbers in between essentially is how we rate. And then that falls within a parameter of a buy, sell, or hold. Now, just because it's buy, sell, and hold at that point does not mean that we execute. What that means is that the technology has a buy, and it has sort of set an exit price, entry price, based on current parameters. However, we then go through what we call synthesizing or optimizing that recommendation. And so that is finding the right entry point, but also every day factors change. So we've got to really absorb that data in each day, which then does vary that decision. And I'll give you a bit of an example at the moment, is that focusing on our energy, and we're bullish about energy in the long term, is that we had Constellation Energy on a buy rating internally for about 3 or 4 months. But we haven't been able to find the entry point for that stock. Now, last night we saw a big pullback. I think it was about 27%. We saw a price fall from $350 to $283. For us, our optics and outlook on energy remain the same. However, Constellation Energy has now come into an entry point for our technology. And so you'll probably see in the next 48 hours, we will roll our customers into those positions. And that's the advantage of our technology, in that the technology is patient. Where if I was bullish on a stock, I'd probably go in and buy it straight away, and it might not be the right time to buy. And so what AI technology does, it creates patience in your investing and really optimizes that entry point. And then obviously we execute once we find the right position. So we have multiple broker partners that we connect with, which is an advantage of Jaaims. So we're not holding your funds personally, and we're not holding your positions personally as well. We actually execute via your broker. So the positions are held in your name and you have full control. So, we will execute, positions for you. But if you're not happy with that execution, or you just want to exit us straight away, essentially you can sell those stocks in your broker, and after T+2, you would have those funds in your bank account, which is a key strength of our technology, in that we're not holding your funds. You have full control all the time. So as I touched on before, time saving is a key advantage of AI, and being able to analyze and execute based off a huge amount of data that you don't need to consume, that the technology can consume. It helps with automating repetitive tasks, helps with saving time, so you can actually set your parameters of what you want to execute in. And then finally, analyzing, the analysis side, which has always been sort of the piece or the next horizon, is automating analysis, or automating analysis on what you like to see, and then having a smart, like an assistant, do all that work for you. So time saving is one of the key strengths of AI, especially for retail investors, because we all have full-time jobs, and we don't have all the time that we'd like to spend on our investing decisions. We do the best that we can. And so tools to help is really a benefit with AI emerging. Finally, and this is a big one, which I've touched on, unbiased investing. The key thing with AI is it's emotionless, and it's not affected by the underlying anxiety that we get as investors, if we should buy or not, if we should sell, when is the right time, all these things that go through our head before we invest in something. And I can tell you that even the most experienced equity strategists struggle with bias every day. It's hard to make decisions when you're getting influenced daily by news, people, and all those things that might not be correct. And so what AI does is that obviously we've set parameters on how this model invests. And if it's not meeting those parameters that we set, it's not executing. And it really takes away that anxiety and that human emotion side that we know affects our decisions. And as an example, I've been an investor for a very long time. One of the foundations of why we started this company back in 2018 is that I really struggled with the anxiety of when to enter. I knew my analysis was always sound, but I always struggled with that mental game of, do I buy now? When do I sell? Do I hold? This person said this stock is a good buy. Oh, everyone's getting in that. Should I get in? So, that was one of the foundation principles of when we developed this company. And it's something that it's really important that, they associate the fear of missing out. And I think if technology can help us eliminate that in our decision-making, it's something that we should utilize, because, it's the hardest part of investing, if you ask me. So in summary, obviously, I've just touched on a few topics and tried to give examples of how we use AI at Jaaims. But AI is effective in managing market volatility. So as I said, being able to weave through the weeds, understanding why is it volatile? Is it something that's going to be detrimental to your portfolio? Or is it something that we should hold and steer through? And so AI is really strong at that. Secondly is fund allocation. So as I said before, being able to understand the current events, entry, exit, and how much of your funds you should allocate to a position. AI is really good at that, because it allows that calculation to happen very fast, so you can execute at the right time. Obviously, I touched on portfolio optimization. So that is looking at your portfolio as a holistic, what you want to achieve, what themes you want to invest in, what positions, and someone being able to basically set that portfolio for you. Obviously, we're seeing robo investors do that, but we're down that next level, where at Jaaims, we're about positioning your portfolio with actual stocks that we own, and we sort of mix that up together to find the optimal outcome. And as I touched on finally there, fear of missing out. So obviously the emotional side and being able to execute effectively and not being affected by bias of what's happening around us. So just to sort of finalise, obviously we've been in the market for 4 years. I just thought I'd put the slide on of how we're performing. Our approach at Jaaims is that we're iterating and working on our algorithm every day. We don't look to shoot the lights out with every update. We're looking for incremental improvement every time we do an update. And that's the approach where I said earlier that we're a technology company, and that's our foundations, is that if we can move the needle by a couple of pips, and we do updates probably every 3 to 6 weeks, that's what we aim for. And so what we're seeing is we're seeing good growth over the years, especially the last 3 years, 4 years, our algorithms really come into its own. So just to give you some quick snapshot, the average funds per client with us is about $80,000. Where we're seeing our algorithm execute mainly is in the US and Australia. We've been pretty quiet on Europe the last 12 months because it hasn't really been a good market to get into. And obviously US has a lot more stocks that we analyze there than Australia. So that's probably why you're seeing a bit more concentration in US as opposed to the US. Our average days held per recommendation is around 128 days. Now, in saying that, we've had some positions that we're currently holding now for a bit over 14, 15 months. And then we've had some short-term positions where we've held for 19, 21 days. So it really does vary depending on the factors in the market, but we're sort of seeing it around 128 days. We're probably producing about 11 recommendations per month, buy or sell. However, that doesn't mean that we're executing that many per month. As I said earlier, we're really, we might get the recommendation, but we might not get the entry point. And so entry point's a really key factor of our technology. And at the moment, trades, we're getting about 65 to 76% of our trades correct, which is improving all the time. So when we first started, we were in the low 50s and incrementally going up, which is what we're looking to see. Just so you know, success rate is a trade that we buy and sell, and it's in positive. And so performance summary here. So what we do is we actually do an averaged, we index our performance based on an average of the ASX 200 and the S&P 500. So the two ETFs that we utilize is the iShares ASX 200 ETF, or ticker code IOZ, and the iShares S&P 500 ETF hedged, which has the ticker code IHVV. So you can see the performance there: 3 months, 6 months, 12 months, 36 months. You can see the index ETF average is an average of those two values. So over the last 3 years, we've mostly been in front of the indexes. Just depends in what point in time that you take this data. So as you can see, this is as of December 31, 2024. So we do our results quarterly. So we had a nice quarter, October, December, up 5.38. Over the 6-month period, 6.22. And over the 12-month period, up 2.41. It's also noted there that our return over that 12-month was 16.04%, but the IHVV ETF, or the S&P 500, was 20.26. So, we don't beat the market all the time, but because we're concentrated between US and AU equities, we find that we're always ahead when we balance those two. And then over the 36-month period, we've done quite strongly. We're about 17.33 above the market. So I'll just end with the future of AI. It's inevitable. Everybody here today, you will use AI in some capacity to help with your investing decisions, whether it's now, 18 months down the track, 3 years. It's inevitable that this technology will need to be adopted to help us make better decisions. And it's just a matter of time before you really start understanding and embracing this technology. So it's something that I would recommend either with us or anyone else that's doing something similar to us, use these tools. They can only help you. And thank you. That concludes the presentation.
Great. Thank you, Tui. That was really good. Very informative. So thank you very much for that. We've got some questions coming through. So I'm going to read those out for you. We've got several questions. And just by the way, if you have a question, just go to the Q&A section down the bottom and write your question in, and I'll relay them on to Tui. So first question is from Peter Clanberg. The news this morning announces a new AI out of China that is better than anything in the USA and caused a massive 15% decline in NVIDIA overnight, as it doesn't need the high-power chips it produces. Also, a big decline on the AI-related stocks. How do you see this playing out with investment in AI?
Look, I'm skeptical of that. I'm like you. I'm just reading the news the last couple of days. When you read it, they believe they've created these models for $6 million USD, which I find unrealistic. It doesn't matter how cheap your labor is or your methodology. It is a really costly, technology to produce. AI, you're gonna see these pullbacks because the technology is advancing so quickly that you're going to see news like this hit the market, and you're going to see these big movements. And there's definitely a trend: sell first, find out later. And I think that will continue over the next 12 to 24 months. It will come down to chips and energy, and so that's why we're bullish on energy. But the things that probably play in China's favor is that they can produce energy at 1/10 of the cost of the US, and they've got much larger energy infrastructure than the US. And so US has largely been asleep in producing their energy, their power plants, coal, their energy mix, and China is well ahead in that respect. So not only will it be an arms race on technology and resources to produce that technology, but also energy, in that even if China does not have the NVIDIA chips and the high-powered chips, they might have the energy that they can use inferior chips, but a lot of it, to get the same result. And that's probably the biggest challenge that the US and the larger players in developed countries have over China. So what I'd say there is, don't get caught up in the hype of day to day. Continue on your readings and the way that you analyze, and if you're investing in AI, and make your decisions that way. The only thing I'll add is that AI is going to be a huge changer in everything that we do, and will not only affect, it'll affect everything that we do. So we're only just touching the surface of this technology and its capabilities into the future.
All right, thank you for that. Another question from Anonymous. Can James consider investing on shares one would like to focus on, i.e. dividend income, capital growth income?
No, so we focus on capital growth, not so much dividends. And that's our approach that we've taken. In saying that, we do pick up a lot of dividend revenue, income, on our investments, but our core focus is capital growth.
Right. Another question from Calvin Steed. James seems to be aligned to day trader type of approach. How does it accommodate a value investor mentality?
So touching what I said before is that, yes, we do get commonly associated with day trading. That's not the fact. As I said, we took the approach, we worked with various equity strategists from the large banks like Merrill's, JP Morgan, in focus groups in the beginning. And what we aimed to do was to replicate the process that they do in analyzing and making their decisions, as opposed to using static day trading strategies that go with the momentum of the stock. And so what I'd say to you is that investing with us is like having 100 equity strategists on your team that's going through the process of fundamentals, understanding the market, the macro, micro environment, economies, and all these data points that it's really hard for one person to do. And so our technology is really on that side, where we're trying to replicate what a human does now to make their decisions, as opposed to use mathematical day trading equations to derive a result.
Okay, thank you. Okay, another question here from Peter. Does your system recommend stocks outside the ASX 200 or the S&P 500?
Not currently. So what we do is every 3 months we rebalance our our equities that we look at. So as you know, I think they rebalance the S&P 500 every 6 months, the ASX 200 is about every 3 months. So we look at what's coming in, what's coming out. The ones that get pushed out, we retain because we've done the work to build that foundation model. The foundation models are really time heavy, resource heavy. And so all that work that we've put into that, we don't like to discard. However, the new ones coming into the S&P 500, we obviously build the models. We also evaluate if it's going to be there long term or if it's going to be one of those ones that come in and out. So we do go outside the S&P 500, ASX 200, but what you'll find is they have already been in and pushed out, not opposed to looking for opportunities outside of those. And we do those for a volume point of view. So we like to have a lot of volume and a lot of data points to be able to make that decision. So if you have a small cap stock, often data points is low, or the amount of data you can find. And so we like the high volume stocks where there's plenty full of data and information that we can analyze.
Okay, thank you. Okay, now the question here from Alston Gregg, who's a BHP shareholder, 50 years, long time. And I guess he's asking here, how specific can AI get? He's asking, can you input the future impact the Guinea iron ore mine will have? Is that something that you can do specifically?
Yeah, so obviously we can go really targeted on a stock and bring in all those parameters. What we do is we actually do generally pick up that information organically because every day we sweep the internet and looking for new data points and new information. So what you'd find is that mine data has already come in to our algorithm or our data points, and we're already analyzing that. So, you know, at the moment, if I went deep into the BHP models, I could probably find out some information for you. But technically, we don't go down to that granular level because our customers are more just looking for the buy, sell, and the entry point. But that's definitely something that we're capable of doing. We just haven't had demand from customers yet.
Okay, fantastic. Now, Ross Cray asks, can you please give me a better understanding of the investment principles behind the construct of Jaaims?
So as I said before, we're capital growth. We're in the more liquid S&P 500, ASX 200. We have a fundamental approach. So we're really looking at fundamentals of a stock, and we have a long-term horizon. So what we do, as I said before, we look at themes and then we sort of have an idea of that theme. Like we have a long-term look, and then obviously our technology goes into the granular level of the equities. So as I said to you before, we have a really holistic approach because we have the capabilities to analyze a stock on many levels. Just so you know, behind the scenes, probably within our core algorithm, we have roughly about 150 to 160 strategies that are running in the background. And so each strategy is applied to each equity, and then a weighting is done how much of that strategy applies. We have what we call strategy meetings, which is really great creatively. So we work with our strategist team, and we actually look at new strategies or new things that we think of that might generate alpha. And what we do is we generate those new algorithms, we do the R&D, and then because we're using AI, we're at an advantage. So when we produce a new strategy, we put that into the core algorithm, and then our algorithm decides if it's going to use that or not. And as I said before, we have had to sort of think of the most effective way to use our resources. So at the moment, we're doing a lot of strategy and a lot of thinking around the three themes of energy, robotics, and AI.
Okay, fantastic. Now, I've got someone's put their hand up. Jimmy Hines, you've put your hand up. So I'm going to see if I can get you on screen to ask your question. There he is. Hand up. Are you still there, Jimmy? Maybe not. Maybe he's gone. Anyway, we've got more questions. Chanda Shah asks, where can we find a list of preferred brokers, or is there only one preferred broker?
Yeah, so we've actually gone down to one. We've got two brokers in the system, Interactive Brokers and Saxo Markets. We're working more closely with Saxo Markets now just because they've got really good reporting capabilities that we want to leverage. So what we decide as a company, there's some things that we do well and there's some things we don't do well. What we think we do well is the recommendation and the trade execution. Do we do reporting well? Not the best. And so Saxo Markets has a really comprehensive reporting structure that we're leveraging at the moment. And especially with our platform, that some trades, as I said, are only held for a few weeks, where some are held for, over a year. So you do have these tax problems, or not problems, but tax issues you need to overcome. Obviously, the 50% CGT on a 12-month hold applies, where your shorter positions, obviously, you don't get that CGT discount. So what we're finding with Saxo Markets is they've really got really powerful reporting capabilities that will allow you just to do a simple report to your accountant and tell you what's taxed, the tax rules. So that's sort of why we're heading that direction with Saxo Markets. Interactive brokers do have a reporting capability, but we're finding it's not as powerful or strong as Saxo Markets. So we're leaning towards more integrating with Saxo Markets at the moment, but we're always open to looking at new partners in the future.
Mm-hmm. Okay, so one more question, or a few more questions. In terms of security, how does Jaaims protect user data and ensure the integrity of transactions on the platform, especially given the increasing sophistication of cyber threats?
Yeah, so we have quite a comprehensive security program in the back. I'll just break it up into a few things. One is data and your personal data. We've gone out of our way just to keep the most limited amount of data that we can about you. We obviously keep your name, email, phone number. Outside of that, we don't really keep any more personal information. So what we do is we will do the onboarding with you, where we do ID, AML checks. But as soon as that check is confirmed, we discard that data straight away. So it's essentially destroyed. So we're limiting the personal information that we are holding in an event that, we do get some people that invade our system. Touch wood, we haven't to date. In regards to execution, we connect to your broker via an API, and we work with Saxo's security team based in Copenhagen. And so we have done quite a lot of work around encryption, the way that we execute trades with them. And same with interactive brokers as well. But we're very confident in that there can't be invaded the by execution from us to your broker. And thirdly, obviously, withdrawing funds, managing funds, etc. As I said, we don't hold your funds. They are held with the broker. And we do quite a comprehensive security check with the brokers before we integrate. And I can tell you, Saxo Markets, I am very impressed with their infrastructure. I've been in technology now for a bit over 15 to 20 years, and they are machine-like in their approach to security. So that's a big component of us, because we understand your money is important, and so you need to make sure that's being held securely, and so that's very important to us as well.
Fantastic. Question from Danny Rishkin. What are the qualifications and experience of your staff in dealing with all the data you collect?
So we have an approach where at the company that we hire a lot of older people in the technology space. I personally have been around technology for, as I said, over 15 years. I find that experience makes a difference in this space. And so we don't really bring on young developers out of university. We're looking for developers 10 plus year, and that's why our development costs are much larger probably than it needs to be. But what you find is that knowledge is paramount in especially what we're doing to advance our system. And so the skill level of our team is, you're talking at least 10 years experience in most coding languages, mainly Java. And then also we have people that's been in finance. So we do pick up some people who've done their, first 5 to 10 years at one of the larger banks or firms, and then they're looking for a less pressure but more creative task, which is what we are. And so that's sort of the people that we look for.
Fantastic. Russ Cray again, how did Jaaims come to the determination of what should be a theme?
So that's managed by our investment committee. So we have an investment committee that we meet every 4 weeks, and we discuss what's going on in the market, strategies and that sort of stuff. And so we do set the themes. The AI is not setting that theme. And again, we still analyze each stock individually. It's more about a focus of resources. And so we pick themes to focus our resources on for that year. However, it's a fluent process. So if 6 months down the track, we're sort of seeing a new theme emerge, we'll look into that, and then we'll devote resources to that. So although we've set 2025, those 3 themes, doesn't mean by the end of 2025 that we're still on those, because we are agile and we do adapt to the current themes and what's going on in the market. I think a big indicator, or the big driver of markets over the next 12 months, is definitely going to be Trump and also his policies. So that's something that we're monitoring carefully and being ready to be agile in the event that we see more opportunities in other sectors.
Fantastic. Okay, I think we've got one last question, and then we might leave it at that. What measures are in place to evaluate and improve the AI models over time, particularly as market conditions and trading environments evolve?
As I said before, we have our investment committee which manages that. As I said, we have over 150, 170 strategies within our algorithm at the moment. We are adding new strategies each day, and each update. But that doesn't mean that strategy is adopted across the board. It goes into our core algorithm, and our core algorithm decides how successful, how relevant that is in that decision of that particular stock. So we have our own practices, and I've seen it where we've developed this strategy thinking it's great, and then our AI core model won't use it. And so we have sort of checks and balances within our own technology that, again, as I said to you, that we get really excited about a strategy, and I'm emotional about it and I'm biased. However, when we put that strategy in, all that work, it might not work. And so that's how our technology works with our investing team.
Okay, fantastic. All right, just one more just snuck in there. Could you advise if the platform is only accessed by an app?
Yes. So at the moment, we have a mobile application. It is actually accessible on desktop, but I'll be honest, our desktop UI isn't the best, but that's something that we're improving on. When we first developed the company, we wanted to really make it. Our philosophy was being simple, and so we wanted to be able to manage our portfolio from the palm of your hand, and that's why we've had a mobile focus. But we've listened to the market, and people do still want to interact with their portfolio online with a computer, and that's something that this financial year really see big improvements on our desktop application.
Fantastic. Thank you very much, Tui and James. That was really interesting. It's hard to believe, like 5 years ago, we wouldn't have been talking about any of this stuff. So, but it's amazing. Like, I think initially people thought AI was just, crazy videos and things like that. But if it can help you invest, well, that's got to be a benefit for everyone. So fantastic stuff. Now, to everyone still online, the webinar will be available on our website probably today or tomorrow. So all the contact details are on there if you want to get in touch with Tui or James. And James will be sponsoring our conference in May. So they will be in attendance. So if you want to get a look at how it all works in person, they will be there in Sydney at the W Hotel. So please register for that. But in the meantime, thank you very much, Tui. Really appreciate your time.
No problem. I look forward to seeing everyone at the conference.
Thank you very much, and have a great day, everyone. Thank you.